mentioned Mexico's had a tough week with the elections and things like that. Realistically, this stuff happens. And I think we've kind of figured out over a lot of years of doing this that, that's really not the problem, right? If Mexico falls X percent in a week, that's really not the problem long term. The problem is not taking action and just following the model and getting it out of there and putting something stronger in. That's really what this is all about. And so, we try not to get too concerned about one name or one area that does something. You can have a good week or a bad week or whatever, but, just doing what you need to do and making those changes when they need to be made is really what makes all of these things work over time.
Hello, everyone, and welcome to the Nasdaq Dorsey Wright podcast for the week ending on June 7th. My name is Ian Saunders, and we're lucky to be joined again here by John Lewis. John, thanks for hopping on this week.
Yeah, good to see you.
Yeah, I know it's been a little bit since I guess it's been a few weeks since I myself have been on the podcast, but it's been a little longer since we've been able to have you in. Unfortunately, we're not able to get you in person this time, but nonetheless, it's good to be here on video.
Yeah, I mean, you've been out on the podcast gallivanting about Europe, so it's good to have you back in the seat.
Yeah, had to get some inside knowledge on all this movement in international equities, which maybe we'll get into in a bit. But
yeah, you still can't write your plane tickets off.
Won't be trying that. But a little bit easier to take the brunt of that playing cost, maybe with how momentum's been doing on a year-to-date basis. When in looking at some of the performance and some of the movement here, really wanted to kind of open up and get your perspective. I mean, we went through a bit of a rough patch there for momentum for a couple of years, and I think the last time that you were on, we were talking about some semblance of that maybe coming to an end, and it seems like certainly over the course of the past five months or so that momentum's been off to a pretty solid run here thus far in 2024. Really just kind of wanted to get your take on what things you're looking at, how, if you think that this run is as solid as I guess the performance is indicated.
Yeah, so you're right. So momentum did have a rough couple years heading into this year. And so it's really nice to see sticking with all these strategies has really been rewarded so far in 2024. And so when the market bottomed, like in the fall of last year, momentum has done incredibly well ever since then. So it's been one of the best performing factors when we look at our SMAs just across the board. So it's not just domestically, but internationally, small caps, large caps, whatever. It's just done incredibly well so far this year. The leaders continue to push higher, which is what we like to see. These trends seem to be sustainable, and we haven't had any major shifts in leadership, which is certainly helpful.
Yeah, and so when you're looking at different representatives or areas you can kind of look toward in momentum, I know that there's different products that we have. There's different products that other products out there that are more kind of on that more academic focused momentum, where ours is that kind of relative strength specific. But when you look at like a factor quilt for different areas in the market, using that classic like a DUM as the more academic oriented approach, right? I mean, you look at broad factor representatives, broad market representatives, MTUM's back up at the top of that performance on a so far through 2024. First time we've seen that since, at least in the quilt I'm looking at, since 2017, and looking at like value, growth, cap weighted, equal weighted, low vol. Is that something that is typically, when you see it kind of pop up back to the top like that, what's this kind of staying power like there? I know we saw some years in the earlier 2010s where momentum was typically more up toward the top end of that. And then, like you said, the last 3 years had not been the case.
Yeah, so generally the runs in momentum last, I think, a little bit longer than people think. And so what normally happens when you have a really good momentum market is the laggards kind of start to fall off, right? And the leadership continues to narrow. And that momentum trade kind of keeps working as a lot of other things are falling off. So, there's not a ton out there right now that looks like super attractive, but there's plenty of stuff from a momentum standpoint that looks really good. So it's certainly possible that you have a market where there's not a ton of stuff working, but there's enough in that momentum trade working for it to keep going. I think like a good example of that everyone remembers was the global financial crisis, right, which started in 2007, right, when a lot of the financials started to fall off and things like that. If you were doing momentum, you had a bunch of energy, basic materials, things like that. You were like totally out of all these financials that were falling apart. So that trade kind of went, and the value stuff and a lot of other things really fell apart in '07. Momentum was fine. It did really well, and it did really well up until like mid 2008. So that trade can run a lot longer than people generally think it can.
Yeah. And I mean, on the energy standpoint specifically, I mean, that's something that we saw in the more recent movement in the market kind of come into play a little bit on the momentum side. Looking at improvement in energy over the past couple of years, and that's kind of fallen off. We've seen some fluctuation in like crude oil prices and energy stocks. I mean, so far this year, but haven't really seen that same effect kind of translate over into the like longer term momentum rankings with energy jumping back up into the top of anything recently, right?
Yeah, so that's exactly right. And we had that big energy trade, whether it was energy stocks or commodities, a couple years ago, and that was really the only place to be. And that kind of deal was part of why momentum underperformed, right? Because you did fine for a little bit, but then everything kind of switched back. So you had to unwind all that energy exposure and move over to like the large cap growth and tech and comm services and things like that.
Right. And we've seen that reflected too. I mean, and looking at like the technology sector, right? I mean, we were chatting before hopping on here just about how much performance from the cap weighted S&P is kind of attributed to some of those big technology names. I mean, that was a theme that we saw last year. I feel like it's gotten some conversation throughout this year, but that's still been the case so far throughout 2024, right?
For sure. Yeah, it's still been the case. And if you look at like a cap weighted S&P versus just an equal weight S&P, the top 5 names really, if you lump both Google share classes together or Alphabet share classes together, the top 5 things are really contribute to all the contribution or the outperformance and the cap weight. So just those things being massively overweight is really the outperformance of cap weight versus equal weight right now.
And so when you're looking at some, obviously we saw a lot of those areas that had done well in the broader market in general, given that is those big areas are kind of the performance of the market. It just went through, had a rough April, but a lot stronger May. Is it normal for kind of like pullbacks like that? Is that something we'd expect or maybe expect more of, or is that, or what are we kind of looking at on that point, maybe moving forward?
Yeah, so you always expect some pullbacks, and they're generally pretty sharp when the momentum trade is working. I think people really do get spooked out of these things, especially during earnings season. You can have issues, right? When these things don't meet their lofty goals, they can often get punished, and that's just kind of part and parcel of what you accept if you're doing a lot of these momentum type of trades. It's a great factor, but there's got to be some pain to it somewhere. And so we see that a lot, and we generally tend to see areas get more volatile as they really become part of that momentum trade. And I think that's normal. There's just kind of more interest in them and things like that. So yeah, we certainly expect that kind of thing, but I think that's why it's really important, whether you're doing this on your own, you're doing managed accounts, whatever you're doing, you got to kind of set all those parameters, right, so that you can account for these pullbacks. And that's why, like when we're looking at box sizes or we're looking at a matrix or something like that, a lot of people, kind of want us to use smaller box sizes or try to get out of something earlier. But the reality is, like, this is exactly why we don't do it. The kind of April, May conversation we're having, things can pull back and then, they find new footing and off they go again. And then we've seen, momentum kind of underperform to start June. It was a bad couple days to start. Yesterday was great. Today is not as great. So, I mean, we can go day by this, but there's, often a lot of like big days one way or the other when momentum's kind of churning around and just looking to push to new highs.
Yeah. And I think that the box size deal does bring up a good point too. It kind of, I mean, that is the reason it's almost kind of like taking a little bit of a step back, right? You want to kind of cut out some of that noise. We no need to go day by day through the movement, right? You just kind of take a little bit of a step back and then wait for the important moves that really are indicated by some of the signal changes or some of the movement changes to really kind of tell you what to do moving forward.
Yeah, like the whole trick to this is filtering out the noise, right? And trading the actual trend. And that's it seems really simple, it sounds simple, but it's actually the most difficult part of this. There's a number of ways to do it, whether you're using like 12 months of data or you're using like a box size on point and figures. So, people have come up with a number of ways that work over the years, but the reality is like it's never going to be optimal. You're always going to have stuff that whipsaws around. But if you're disciplined about it and you do kind of filter out enough of that noise, it's a really great factor over long periods of time.
Yeah. And when we're looking at trends, right? I mean, we've talked a lot about trends, or at least the continuity of trends on the US equity side of things over the past few months. Other areas of the market have shown some pretty interesting trends recently too. I know we were talking as well. We've had some bits in the report about international equities. And so when you have areas move higher or move lower in other aspects of the market, I mean, is the momentum factor something that kind of works across different aspects? I know we can chart anything with the price that moves, right? We can track the trend over time, but how well does it work out in other areas of the market typically?
So generally very well, right? So momentum is certainly not just for large cap equities. It works really well in small caps, works great internationally as well, because if you start to think about it, there's more dispersion in an international universe than there is in like a US large cap universe. And by that, we mean the returns are just much different in different political environments, different economic regimes, currency regimes, that sort of thing. And so there's just a number of different places you can go. So on the international side, that's also done incredibly well to start 2024 along with domestic. And we've seen a big pickup on the asset allocation stuff in the strength of international equities over the last couple months.
Yeah, absolutely. I mean, in looking at their Dolly asset class rankings, we saw international equity still sits in second, far behind domestic equities, but it gained the most strength of any asset class there in May, which was kind of, I mean, I wouldn't say maybe surprising to see, given some of the near-term moves we've seen in areas like China, right? You see a lot of areas kind of picking up the pace a little bit once that comes back into favor. I know the international equity strategy, looking at the momentum side, though, has benefited a lot from the underexposure or lack of exposure towards China over the past 6 months or so, right?
Yeah, for sure. So that's been a bit kind of, an area that's been really interesting. We've talked about it a lot this year in terms of like how momentum in emerging markets are doing versus broad market benchmarks, and China being such a laggard for a while. I mean, it was like at the bottom of the country matrix for a long time. Now we've seen it perk up more recently and we've seen it do a lot better. I think we'll need to see some continued strength, obviously, for that to kind of rocket up into the top quartile of those country ranks, which is where we kind of start to get interested in it. But it's, 30 some percent of an emerging market benchmark. So it really has an outsized weight in how the performance of emerging markets does. And if China's a real laggard, right, it's a lot easier to outperform an emerging market benchmark because you just don't have a lot of exposure there. When it does well, right, you really have to kind of have a lot of weight there in order to keep up with the benchmark.
Right. When we're looking at that country matrix, like you mentioned, I mean, China did pick up a little bit. It's still down. I mean, firmly, it moved from, I think, 42 to 38 out of the 42 member countries. But it's in a column of X's, so the more near-term indication, against 36 out of 41 other things. So it's shown that like near-term move. But other areas, I mean, over in the emerging Asia space, like Taiwan, have shown kind of a little bit more improvement than China, at least in that matrix rankings. And I know we had some model changes on the site for those that are subscribers and are following. Some areas that sold out of some areas like Mexico. That's had a rough week, to say the least, and moved into some other areas like Taiwan. So there are other areas, even though China's getting all the news headlines, there are other areas that are doing pretty well so far this year.
Yeah, I mean, definitely. And, you mentioned Mexico, but we've had a lot of success in the Latin America trade, right? So that's a lot of emerging markets. And that's kind of where a lot of our overweight has been: Brazil, Mexico, even like Argentina, which you don't find in emerging market benchmarks, but you can still find exposure there. And, like you mentioned, Mexico's had a tough week with the elections and things like that. realistically, this stuff happens. And I think we've kind of figured out over a lot of years of doing this that, that's really not the problem, right? If Mexico falls X% in a week, that's really not the problem long term. The problem is not taking action and just following the model and getting it out of there and putting something stronger in. That's really what this is all about. And so, we try not to get too concerned about one name or one area that does something. You can have a good week or a bad week or whatever, but, just doing what you need to do and making those changes when they need to be made is really what makes all of these things work over time.
Right. That makes a lot of sense. So in looking at, I know there's one other, when you were looking at other asset classes, I'd be remiss if I didn't ask about one that I didn't include on the notes to shoot it shot over to you. But in the fixed income space, I mean, that's been one area that has been difficult on the trend following side, to say the least, over the past few years, right? Or what are we I know rates have not seen the same level of volatility, I guess, throughout this year that we saw throughout the past couple of years. I mean, what are you kind of looking at in that fixed income space? And do you see that area as maybe any kind of shifts or things to look toward as we move through into the second half of the year?
The volatility has really come down. And Chuck wrote a nice piece using that ML Move Index, which is, kind of a VIX for fixed income, right? It's just, it's not as well known, but it's, when the volatility comes down in the fixed income space, that's actually very good for trend following. So that's nice to see that kind of working itself off. Now, the flip side is things have been pretty choppy. I think there's still some uncertainty about where rates are going, how the data is going to come out, things like that. So there's still kind of a lot of back and forth chop. And when you look at a point and figure chart of AGG or something like that, you just see kind of this back and forth, breaking a trend line and, a trend line to the upside or the downside, just kind of washing around out there. So I think until we get a little more, clarity on the direction of rates and we get some more durable trends, we're just, kind of in a little bit of a holding pattern. But I think what we're seeing is the beginnings of what we want to see happen, which is that kind of volatility come down. And then, as the summer goes on and it becomes more clear, if and when the Fed might cut rates, then I think we'll be in business.
That makes sense. And when you mentioned AGG, I was looking at the chart like TNX. I mean, it's a kind of a clear, like almost triangle formation that's kind of been occurring there over the course of the past several months. And so to your point, if you see it kind of the volatility coming down, and then, I mean, that triangle's got to break one way, right? Got to break one way or the other. At least you get some kind of indication they're moving forward.
Yeah, and I do think people forget how much volatility there has been in rates, right? Everyone just thinks rates have just shot up and had no, back and forth along the way. But when you kind of zoom out and look at some of those charts like TNX or whatever, you can see a lot of like false breakdowns and things like that. So it hasn't been the greatest area for trend following, that's for sure. But when we look at what happened on the equity side, right? Like you had a rough 2 years and then bang, all of a sudden it starts going. I would not surprise me to see that in fixed income. You get clarity and then all of a sudden the trend following just really starts working well. That's, kind of how this stuff works. And it's, across asset classes. I don't think fixed income will be any different.
That makes a lot of sense. And that's probably as good of a place as any to leave it here. I know we could keep running through all the other asset classes if we wanted to throughout the rest here, but that's probably a great place to leave it. So, John, thank you for joining us this week. And I did want to give a special shout out as well. If you want to hear more of John talking about movement and momentum, then definitely want to announce that we have opened up registration for our Catapult 2024 event. It's going to be held in Nashville this October, and October 15th through 17th. So registration's open as of, I guess this podcast coming out on Friday. It's open as of Thursday. So if you want to see John up on stage talking more about this stuff, definitely be sure to sign up there.
Also, if you want to see Ian up on stage talking about other stuff, you can register. First time in Nashville. It's going to be fun.
It will. It'll be a good time. I've never been there. I'll have to get some new cowboy boots or something for us to wear on stage there.
Yeah, it should be good.
Great. Well, thanks, John, again for hopping on this week. Thanks everyone for tuning in this week, and we'll be back to touch base with you all next week.